Well, there have been many highlights over the last 12 months, and in particular, we've made significant progress in our turnaround journey. We've also managed to completely transform our cost base across our operations, and in the process, as a consequence of the very strong free cash flow generation, we've been able to significantly strengthen our balance sheet. Some of the specifics in particular that I'm most proud of would be the embedding of a new management team, a disciplined new operating model, rolling out a 5 core asset, long life gas asset strategy, and as a consequence of all of that, driving very strong free cash flow generation across our asset base. In our upstream onshore asset operations, we've driven well costs down in the Cooper Basin by around 42%, from more than $5 million per well to $2.8 million. In GLNG, our well costs are down to just under $1 million per well. Again, that's about 43% reduction in costs. We've been able to reduce our net debt to around $2.8 billion from over $4 billion at the start of that journey. Well, in 2016, we rolled out our Transform, Build and Grow strategy. And so the good news is the strategy hasn't changed. It's exactly the same strategy as we rolled out in 2016. So we'll continue to focus on the key activities around the transform phase of our strategy, which will focus on 5 core long life natural gas assets. We'll continue to implement our disciplined, low cost operating model to maximize cash flows from across that core portfolio and maximize production, continue to drive down costs and increase gas supply. Taking a longer term view, we'll be building the foundations to have a sustainably successful business over the longer term, which will involve implementing fit for purpose systems and processes and governance structures to ensure that our investment decisions and the key decisions we make over the next few years are robust and deliver the value that we promise. Our focus in 2018 in the build and grow activities will mainly be on continuing to establish new growth opportunities around our core assets, whilst through exploration continuing to look for new asset opportunities into the future. The Santos operating model sets a disciplined framework to drive value across our portfolio. First of all, it defines the 4 phases of our asset life cycle: the exploration activities, the development activities, our production activities, and of course, our marketing and trading activities. These are the 4 fundamental phases of our asset life cycle that all of our assets go through during that life cycle. Our core asset portfolio has a set of rules, just like any investment portfolio. And in particular, we're determining that all assets within our portfolio have to be free cash flow positive at $40 per barrel oil price, no matter what the actual oil price is. Our gearing ratio for the portfolio should be somewhere between the 25 and 30%. This is a discipline that we haven't applied in the past, and what this discipline will ensure going forward is that no matter what the oil price rises to, if we're conducting all of our activities and we're free cash flow positive across our business at $40 oil price, then the higher the oil price, the higher the margin. And the asset operating model also defines the 4 key priorities for the cash that we generate from our assets. And these are quite simply debt repayment, to fund our exploration activities, to provide returns to our shareholders, and of course, to support the funding of future growth projects. Well, 12 months ago, we set out a new strategy to become a low-cost, reliable, and high-performance business. Pleasingly, we're ahead of plan on that journey, and today we have a strong platform for growth. We're Australia's lowest cost onshore operator. We've implemented a new disciplined operating model focused on shareholder value. We've strengthened our balance sheet and reduced debt. Our 5 core long-life gas assets provide stable production for the next decade, and our free cash flow break-even below $40 US per barrel. And we have significant growth opportunities in PNG, Northern Australia, and of course onshore Australia at our Narrabri project in New South Wales. Looking forward though, our strategic priorities for 2018 will be to continue to reduce costs and increase operating cash flow, allocate cash to development capital to maintain production levels across our core assets, and to repay debt, with our target to reduce our net debt to $2 billion by the end of 2019. Our disciplined growth initiatives will be aligned to our core assets, and we'll continue to look to accelerate programs for new projects in PNG, Northern Australia, and of course Narrabri. And internally, we'll focus on strengthening and developing Santos' high performance culture so that we can sustain these performance levels over the longer term. This is what excites me about Santos' future.